Hi everyone and welcome to another quick take episode. Today we are looking at GrowGeneration Corp. It's another company that is in the cannabis space. What it is a farm supply company. It provides equipment and soil and nutrients to specifically cannabis growers, but it also provides to other just normal gardening growers and plants growers. So in an age where people are trying to find money, find gold, it's actually literally selling the shovel. So that's a good place to be in. Now looking at its ratios here, P ratio is definitely not good looking great. It's 925. Again, the sweet spot that I want to see is between 15 and 30, maybe 35 if I'm really bullish on the company. Now the quick ratio shows that it has enough cash to last around 3 years or so. But there's no dividend yield, especially with such a small company. I don't want to see that it's paying dividends, because I want to see that it's using that money to grow itself. Now with the cash flow statement, notice that it's 2019. 2020 hasn't actually been released. Operating activities gone down. That's not a good sign at all. Investing activities, cash from investing activities is negative. In some way that you want to see that it's investing in itself. Now cash in financing activity looks like it's raised some capital through issuance of stock. That is fine. And net negative change in cash, and again, that's not totally a bad thing, but in this circumstance it's a little bit worrying, since operating activities, cash from operating activities has gone down. Looking at here the balance sheet, we see that current asset doubled and total liabilities more than doubled. So again, that's basically showing that. Let's look at the cash. Cash gone down while current liabilities go up. So that's not a good thing. So we want to find out how they got the quick ratio of 3 point something. So bring up the calculator here, clear that, and clear in here. So I reckon let's take the cash 12.98, which is this figure here, and we'll count in the total account receivable, which is something that credit card payment, account payments that due in with 3 to 6 months. All right, we got 17.44 divided by, let's say, accrued expenses by the account payable. So we got 2.89, so it's not exactly where the quick ratio was supposed to be. So it's really interesting how they came up with that number. I wouldn't count total inventory in, just because inventory, when, again, already explained this, when the creditors come and want their money back, inventory doesn't have the same liquidity. So yes, what we can see here is 2.89. I probably I'm not sure how investing.com calculated, but this is the figure I got, which is not bad. It's definitely not less than 1, and that's what you want to look for. All right, income statement. Income statement, we see that the revenue has grown from 79 to 29, 79.73 divided by 29. So that's 2.7. Let's just quickly go back to inventory and have a look at that. 22.66 divided by 8.87. So what we can see here, that inventory is growing kind of in pace with revenue. So that's a good thing. So it's basically not warehousing too much inventory. Net income's gone up, so that's a good thing. So it's making some money, but it seems like not in cash. It could be, let's quickly go back here and see account receivable. So account receivable grown dramatically. So but cash is still king in certain sense, but cash flow does not indicate profitability. It just indicates operational kind of like buffer, if you like. All right, jump straight over to the chart here. We can see that it has a really good run, almost exponential. That makes me a little bit weary in terms of like coming in, even for short trading, just because there's a chance that it will come down. and there's a big drop here, but doesn't seem like it's because of any big institutional sale. Great position would be around this at this point, when you can see I would have let that drop a little bit. So here would be the buy point, but hindsight is 2020, and then you got a good run up. Or even here where you see a massive spike in volume, and considerable change in share price here. So I reckon it's retraced back to the 78.6% level. What I would probably do, and that's kind of like tying up with this support here. So and it closed on an up, a positive candle. So that's a good thing. But I'm just worried of the volume here is not actually saying something much. What I actually expected to do is actually will drop down to this particular level. If I'm really FOMOing out, which I'm not with this particular company, I will come in for a very short trade, and just grab, and if it hits there, I want to see a little bit of a this decision to rise back up before I come in. RSI show was overbought, but now it's kind of settled down a little bit. Here's the net income. Net income looks good-ish. It's definitely making money now. Before it was just losing money. So yeah, that's pretty much it on today's episode of Quick Take. If you like what you see, please share, like, and subscribe. If you have any other comments regarding this particular episode, please leave that in the comment section. I've got other videos like this one and a series called The Early Bird, where I do in morning of every weekday, just talking about the news and how it will affect the market. So also check that out, and make sure you subscribe to stay up to date. Thank you so much, everyone. Have a great day. Bye-bye.